Good morning, ladies and gentlemen. Johnny Crypto here, your fellow cryptocurrency weirdo. Just here to give you another update on what I see as a technical analysis and perhaps give you some pointers for the day traders out there that are surviving in this hectic market. And I'm not a weirdo, by the way. I'm pretty fucking cool, actually. So on that note, let's get into the technicals. So as we can see here, the first thing that we should all note was we finally broke out of this terrible chop situation. We breached the line right around 34.40, I suppose, and we actually made a single attempt right here, as you can see by that massive wick, and we actually did briefly break down to about 34.30. At that point, I have to admit, I did flinch. And I ended up getting chopped back out as we came back up, and I decided that I would take a little bit of a breather, because one thing that you have to notice in this type of a chop market is that a lot of this activity is not a lot of it is due to market makers, especially those that have the capacity to move the market by clearing the order book in either direction. And so what happens is you in a scenario of a lot of sideways trading, you get some bots and some whale market makers that will see that we're approaching a bottom or a top of a channel, and they'll take that opportunity to tip the market over the line, which will cause a panic sell. Lots of stop loss orders get triggered, and then you have major wicks like this guy right here, and like this guy right there, and another one right there, and obviously all the way back here. So with that in mind, the only thing that you can really do in order to make sure that you don't get caught up in these types of scenarios is to just sit on your hands and be patient, because the one thing that you don't want to be doing is panicking, and when you panic, you end up making stupid decisions, dumb trades, and end up getting chopped out. And getting chopped out is the worst, especially if you're trading on a lot of leverage. So, and I do trade on leverage, I will admit, but if you are trading on leverage, I would never recommend going more than 5-10 times leverage max. And you really only want to be using a lot of leverage if the market is in a determined direction, if we've taken a trend. So for example, the clearest example of that would have been right here where we exited and we entered a free fall zone. So in that case, you can be relatively sure after the trend line had been broken, the support line up here at 52.08, that we were in a trend, and you were generally somewhat safe until we hit the next historic support line. Other than those situations, though, guys, if you're just scalping like these types of trades in here, I'd keep the leverage to a minimum. But that's just me. So. So what happened over the past couple of days is we finally decided to break this consolidation zone. Now, unfortunately, the break downward was not exactly what I had been looking for. We didn't exactly get the volume that we needed for a major move, and I think that is mainly because we still have a major support line to hit. First down here at 32.50, and then finally for the ultimate floor of 3100. Now, as you can also tell, you might have been able to tell from what I've said previously, is that I'm generally trading this with a bearish bias, and that is mostly because of this lower high after lower high after lower high after lower high. And a general rule of thumb that you should consider when trading in any market is that you want to, while day trading, you want to be following the general trend. And the Bitcoin market is still generally bearish. So if you are trying to make bullish trades in this market, you are really only going to be trying to make small little scalps. And while scalping is fun, I have a life, and I don't want to be sitting in front of the computer at all times because, as I said, I'm pretty fucking cool. A lot of people need to see me. A lot of people like to talk to me. So day trading in terms of, or scalping in terms of day trading is not really my practice. That's why you'll notice that I like the 4-hour chart. I like to take a little bit of a short-term position when I'm trading. So back to the most recent market move. After this chop, we had a clear break of this support line at 34.44. I think I said it was a little bit lower last time, but yeah, around 34.45, let's say. So after we got a confirmed break in the 4 hours, you can see down here, we had a test. The test was unsuccessful in breaking back above. So right about here, I opened another short. And I've been holding it still. We had a little bounce right down here around 33.35. And when that happened, we once again are now on our way back to test this new resistance line, which had been an old support line. So keeping that in mind, I have a stop loss. Oops, undo. I have a stop loss currently set right up here at around 34.75. I like to give my stop losses a little bit of room because in situations like this guy over here, you can get little wicks that will break through. And in that case, you don't want your stop loss to get hit because then you are going to get absolutely dummied as the trend goes back up in the direction that you were initially forecasting it to go. So with that in mind, I'm in a trade. Like I said, it's a short. It is not rocking that much profit right now, but I am generally expecting this downward trend to continue. Now, one thing that I have here outlined by these turquoise channel lines right here is a potential falling wedge. This isn't exactly a textbook falling wedge yet, because in order for a trend to be textbook, you need to have the line tested 3 times. So we have one test here, one test there. That's 2, and then 2. Sorry, 2 in the bottom, 2 in the top. So noting that, I would call this a potential falling wedge. So that's one thing I'm keeping an eye on, because if the price does break back up against this 34.40, what do we say, 34.45 line, then I wouldn't at all be surprised if we in fact made it back up to the top to test this area along here. And my kind of reset point where I would go back to the drawing board is if we broke above this falling wedge, air quotes, potential falling wedge. And you know what? I'm actually going to do you guys a favor, and I'll just make this a dashed line because we don't. Where are you? Come on. There we go. Just to be a little bit more visually relevant to all those people that are watching. There we go. Okay. So in terms of the position I'm in right now, my target zone would be right down here at about the 32.55 line. Now, as I said earlier, the volume here was a little bit disappointing on this move. It was only a tiny little blip, but we did have an initial break of a major support once again. So I'm still relatively confident in this position. And a little tip too, if we do get denied a second time from this line right here and head back down, I will probably look to add to my short. And once we enter the bottom half of this price channel, they'll probably start to take some profit as well. Now, just to give you a little bit more of a longer term perspective, I always think it's a good idea to look at the weekly chart. So here is the weekly log chart. And I have some major support areas that are drawn in. All of these are based on historical support and resistance that have been tried, true, and tested. And just as a kind of a side note, when I'm looking at charts, especially longer term charts, I do tend to use the logarithmic scale. Now, the log scale, for those of you that don't know, is a typical price scale is, let's just take this off so you can see the difference. So there's your regular price scale, and the difference between the two is that this scale is denominated in dollars. So as you can see, it's an evenly spaced scale, 2,000, 4,000. What this doesn't allow you to do is appreciate percent changes, which is what the log scale does. So in the log scale, each each different mark on the scale is separated by an equivalent percentage point. So it kind of allows you to smooth out the trend to really see a more relevant picture. And a lot of traders actually prefer to use the log scale for that reason. It's a little bit less distorted. But important to keep in mind is technical analysis and everything that appears to the eye on the chart is only relevant if it is what the majority of people are looking at. So there is some argument that, okay, Johnny, the most traders aren't using the log scale, therefore you shouldn't use the log scale because you want to be making your moves according to what the majority of other people are looking at, and that would be the regular scale. To those people, I respect your opinion and I respectfully decline. Just because, as you can see, we have a much clearer picture of what's going on with this log chart, much cleaner. So a quick recap. Here was our previous proverbial peak up at 20K. And then we had a extremely characteristic falling wedge formation. And this falling wedge, sorry, not falling wedge, descending triangle. And this descending triangle ended up breaking downward. And one way that I was forecasting how far this break would go is by taking a pole, the distance from the tip of the descending triangle to the base. Let me give you a nice solid line there. We'll do that one in white. So you measure that, and then we will take, we will take this guy, and we will move him down here. Oh, you see what's happening here? Okay, so what? So that pole actually ended up stretching out because this is a log scale. So, goddamn. So, anyways, if you can kind of estimate this distance right here, then that is approximately how much we did fall. So the fall to 3,000 was very characteristic breakout pattern of this descending triangle. Now the one thing that I am looking at very closely here on this weekly chart is the formation of a second potential falling descending triangle. I keep saying falling triangle, falling wedge. You get the idea. So it was initially we had a kind of a pause in this descend rate around 3,900, and that's where I've drawn the top of the triangle. And then obviously we've had the plummet down to 31. That created the bottom, and it looks like we are sort of respecting a descending resistance line, which could be a potential. Note the word potential. I will dash this line so that you don't think that I'm for real. So another potential descending triangle could mean that we are looking for another break to the downside. Now we would be looking for a break that would be roughly the equivalent of that vertical distance, which should bring us down to 2,100 to 2,200-ish area. And that's actually where a lot of people are claiming that this bull market is going to end up finding its bottom. Another important note, actually, before I move on about this 300 line, was that the 200 weekly moving average was what ended up culminating with this previous area of support and resistance over here to create, and here, to create a massive support line. And so that's where we saw this extremely vibrant reaction rally. So anyways, continuing on, oops, get out of here, buddy. So continuing on, if this descending triangle does materialize, then I would be fully expecting a drop down to 220, and in fact, this range, this trading range, would be a massive moneymaker for all of you out there that are trying to day trade this market right now, because this 2,200 to 3,000 price channel is a significant price channel, a very high percentage, a lot of good ping-ponging, as we call it, can happen in here. And then I would say that my ultimate downside target right now would be Bitcoin's equilibrium price. So the equilibrium price is essentially the average price of Bitcoin over the long term, over its entire history, and that is right now at about 15 to 1800 area. And this is, of course, very speculative, and obviously a disclaimer: I'm not a none of this is financial advice. I'm just giving you my opinions on the markets and the trades that I personally am deciding to make. Obviously, it is up to you to do your own due diligence before trading in the crypto market, because these markets are extremely volatile and you can lose a lot of money if you don't know how to do it properly. So with that disclaimer out of the way, and all the lawyers can pack up and leave. Yeah, so sorry. The equilibrium price of 15 to 1800 would not at all be out of the picture for me personally. And to give you an even more macro view, guys, this just to give you a sense of where we are. This you can really see that a further drop to the downside is not really that outlandish, just judging on where we are currently and where we've been in the past. And as per usual, these bear markets, they don't happen. They don't give you a strong reversal back up to the all-time highs, as all of the moon boys seem to think is going to happen. So what usually happens, as you can see down here, is we have some chop and then downside and then chop and then an extreme downside move and then a level out, and then slowly we begin to start building our way back up again. So if we kind of can estimate from the last drop, this one, if we do kind of crest downwards at 1800, might look something like this. And in that case, we could be looking at, as a lot of people are predicting, 2020 to 2021, the year would be, those years would kind of be where we might be able to kind of get a more sure estimate that the bottom is in fact in, and that we might be heading back upwards. Now, there are a lot of things that could happen in the meantime, but that is just my take on things right now. So on that note, guys, I'm going to get back to the charts. I'm going to try to post videos as often as possible. I'd like to get one up every day, but I am studying for my CFA exams right now, so I'm no longer a full-time trader. I had been in the past, but my days are pretty jammed with lots of fun stuff like statistics and ethics. So on that note, as I said, I will try to post another video hopefully tomorrow, if not in the next couple of days. Until then, keep it real. Get out there, get outside, get off the screens for at least a few hours a day. Exercise those social skills. Stay healthy, stay happy, and we'll talk later. Take it easy, guys.